as we look across other asset markets, like I think we've gotten really sort of stuck in what's going on in the in US mega cap stocks. Like US mega cap stocks, which everyone have gone up a lot and everyone's focused on, are essentially the most expensive financial assets in the world. And so I think it's one of these times where we really have an opportunity to look sort of outside the US sphere and try and start to find value. Like maybe we likely are going to see some economic weakness ahead. The question is, where do we find the best value globally, particularly in the equity market? And I think what you see here is this is drawn from a tweet that I put out a couple of weeks ago, which is, in the US, we have an earnings yield of, give or take, 5%. But when you look at other equity markets around the world, particularly priced in dollar terms, what you see is they offer meaningfully higher earnings yields, as well as the fact that their prices have not significantly risen. I mean, like look across all those gold lines, like basically all those asset markets, all those stock markets are where they were 5 years ago, whereas the US equity market is up 60%. And just like in bond prices in the US, what we see is basically that US stocks are radically mispriced relative to the rest of the world, coming into a time when where expectations are extremely elevated, where bond yields have gone up a significant amount and haven't been discounted, and where economic momentum is starting to weaken. You sort of look at that whole picture, and it's not a good one for holding US stocks. If you need equity exposure, it's definitely worth looking outside the US, where there's much more conservative outcomes priced into these markets. And in particular, what you see on the lower right-hand side there is that a big reason why this is because the US dollar has been the dominant, has experienced one of the biggest rallies over the course of the last decade in its history, and it is at or near long-term elevated levels. Typically, when we transition in a cycle from a period where the Fed is meaningfully tighter than the rest of the world to where the Fed is starting to ease, that really is the time when you start to get these turns in the dollar market. You can see that. I think actually 2000 is an interesting time where you started to see the 2000 cycles where you started to see that turn. And we very well could see a similar dynamic playing out here as well. And that would only reinforce the beneficial aspects of holding global stocks. Not only are they good from a yield perspective, but from a price perspective, a falling dollar would typically be beneficial for US investors holding those assets.